30 minutes this Monday morning until the start of cash equities trading, and we are going to feel the effects of the rhetoric from the US to Iran and back again. That is going to weigh on equity markets at the start of the European trading day. Some of this goes back to Friday's session in the States because we had US equities down considerably on Friday, Lizzie, toward the end of the session, and we need to catch up with that. But US futures also pointing lower, incidentally, down by 1% on E-minis and on Nasdaq futures. But Europe, for the moment, will be in the crosshairs.
Yeah, yields higher stateside on treasuries across the curve. But if we look at the European bond space, we also have yields higher across the continent, across the curve. Investors, of course, increasingly concerned about inflation as a product of the war, that upending rate expectations. But do note here, you've got the French 10-year yield higher 5 basis points. We've just had those local elections in France, the far right missing the key targets in those municipal elections. And we'll get more on why this reaction has been the product of that in just a moment.
Joining us now, Pooja Kumar, Senior European and UK Rate Strategist at TD Securities, with us this morning. Pooja, good morning. So Lizzie's just been through some of the movements we've seen in bond markets this morning. During Friday's session, we seem to see almost across the board higher yields, not quite everywhere, but a lot of higher yields across Europe, and a lot of different parts of the curve as well, not just the sort of short end. Today we see some more of that, but in particular France and Italy, where we see yield spreads, I should say, widening. What's happening? Let's stick with the France story for a moment, because of course we've got this political dimension. Is it the politics that pushes that yield higher this morning, or is it the broader Iran narrative?
I would say it's more of the broader Iran narrative. I think French political situation is very well known for markets, and we still have a long way to go towards the election. But what we are seeing right now is the widening of EGB spreads, the tightening of financial conditions across the board when it comes to Europe. Like BTP versus bonds actually is, we had it trading around 60 basis points ahead of this crisis. And, we have seen that when we do see a hawkish narrative from ECB, this spread should widen, right? So I think that's the narrative that's actually driving the spreads wider across the EGB space right now.